Hey everybody, welcome to this week's market update where I'm going to share how the real estate market in Central Florida has been doing for the last week. And at the end, I'm actually going to share some of my thoughts of what I'm seeing out there that you might be interested in. So stay tuned. Everybody might know, my name is Tim Veigle. I'm with Watson Realty. I look forward to sharing this with you every single week. Now, as we move on, don't forget, subscribe to my YouTube channel. There's going to be great content coming out as the year goes on that's going to help keep you informed. So now, without further ado, let's go ahead and share this week's market update, which is for March 21st through the 27th, so Monday to Sunday. And some of this might shock you. So actives currently, we're still at the very, very low 3149 current actives as of this second. And that number is fluctuating as we get more pendings going on in the market. But for the most part, we're pretty stagnant, staying relatively close to the same. The only one that really had a big jump in actives was Lake County. Solds. So still below the 1,000 threshold. We dropped off 10 solds week over week. So we're down to 949 solds over this last week, which really isn't that much for our market. Leading the way, as always, is still Orange County, but we had some pretty big gainers with Osceola, which jumped up from 198 from 184. So good job there, Osceola County. Now, median sales price, this is always something people like. And right now, week over week, we're approximately a 4% increase. Orange County is keeping steady with their recent jump that went to 400,000 at 395 this past week for the solds. Seminole County, though, also made a jump up there a little bit. And then even Lake County made a jump. So we're starting to see some movement within the counties moving up, which could be signaling the start of the summer selling season, if you think about it. So we still have low inventory and lots of buyers. Now, days on market, pretty steady, 7, 7, 11, 9, and 7. So again, 2 weeks, no new actives, we're not going to have a home to sell. So if you're thinking of selling, the market is in your favor. So again, here's some of my information. Always remember to connect with me. But before we let you go, here are some of my final thoughts. So the misspelled that one, but the market is definitely heating up. So I can feel it in my veins. I got a lot of buyers and sellers coming to me, trying to figure out when they want to enter this market. It's still being driven by low supply and high demand. People be like, well, isn't demand going down with the interest rates going up? No, because if you look at it, our interest rates are still very low historically compared to what you've seen over the last 30, 40 years. Now, what's really keeping sellers on the sideline is fear. So the biggest fear is they're seeing these markets go and they're interested in selling their home, but they don't want to be left homeless. So they don't want to sell their home, be left homeless to find out that they have issues and can't find a home. Now, and that's why it's more important than ever to reach out to your realtor, whether it's me or someone else, talk to a professional so we can figure out the pros, cons, and how we can go about this that will best serve you. And then another thing that's keeping people out is you read the headlines, we're heading for a crash. I see that all the time when I'm checking my Google alerts. And the fact is that's not true. You know, for a crash to happen, we have to have something that's overinflated, that is imaginary, that is false. It's a bubble you can't see that's going to eventually pop. Everyone keeps bringing up the crash because in our lifetime, in the last 13 years, we saw a real life real estate crash. But that's not the case. Back then, we were buying houses on credit, had no equity in the home. So when the bottom dropped out, we had no equity and we were upside down and there was nothing to do but to get foreclosed on and sell homes. Right now, with the way the market's appreciating, we don't have that. People are paying above appraisal if it didn't appraise. We're getting buyers and markets just driving it up. What we're more likely to see is we're going to see a cooling off in the market. But what will happen is instead of buying a home at this price, you'll buy it at this price. So we're just going to level off. Instead of seeing the 10, 12, 15, 20% year over year, we're going to see 3 to 5%, more normalized market. So keep that in mind. But I hope you guys enjoyed today. If you have any questions, again, leave a comment. Don't forget to subscribe to my channel. We're ready. We're willing and dealing here for you. I'm ready to sit down and talk to you all about all your concerns. Talk to you soon.